Welcome to the Deep Dive. Today we're plunging into the recent financial performance of Skipper Ltd. Now this is a company, maybe not a household name for everyone, but it's quietly building the backbone of global infrastructure.
Absolutely, a really significant player.
Yeah, so we're sifting through their Q1 FY26 earnings release, their investor presentation, latest board meeting stuff, all fresh info from July 31st, 2025.
Right.
And, in a market where every company faces challenges, how is Skipper Ltd not just navigating, but, well, setting new records and positioning itself, it seems, to dominate critical infrastructure?
That's really the core question, isn't it? We're not just looking at raw numbers here. We're trying to connect those figures to the deeper shifts happening, power transmission, telecom, even polymer pipes.
Okay.
Our mission really is to pull out those key nuggets, give you a shortcut to understanding the why behind this momentum, what it actually means for the future. For Skipper, yes, but also, the wider economy.
Exactly. It's like decoding the story behind the spreadsheet.
Yeah.
So as we start this deep dive, what immediately jumps out at you from their Q1 performance?
Well, what's immediately striking, I think, is that Skipper isn't just seeing growth. They're hitting new operational highs, like actual records.
Okay, not just percentages up, but records.
Right. Highest ever first quarter revenue hitting ours, $12,539 million. That's substantial.
Yeah.
But maybe more impressively, their EBITDA for any quarter, not just Q1, reached ours, $12,272 million, another record.
Wow.
And maybe the most forward-looking piece, their closing order book. As of June 25, it's over $85,000 million, highest ever. That paints a picture of significant upward momentum.
So it's record-setting growth. How big were those year-on-year jumps then? Give us some context.
Okay, context. Revenue grew a pretty solid 15% year-on-year.
Right.
But the profitability, that really soared. EBITDA was up 22% year-on-year. And crucially, margins improved to 10.1% from 9.6%.
Efficiency gains there.
Exactly. And then right at the bottom line, profit before tax, profit after tax, both surged by a remarkable 41% year-on-year.
41%, okay.
That's strong.
Yeah, it signals not just top-line growth, but, like you said, real operational efficiency gains kicking in.
It sounds like management feels this too, sees something beyond just the numbers. I saw quotes from Mr. Sharan Bansal and Mr. Devesh Bansal, the directors. How are they framing it?
Oh, they're clearly upbeat. Mr. Sharan Bansal said FY26 started on an exceptional note. He pointed to the strength in engineering and polymer, driven by exceptional operational execution and customer focus. Pretty clear.
Right.
And Mr. Devesh Bansal took it a step further, saying the Q1 performance goes beyond numbers. It reflects momentum, transformation, and future readiness. So they see it as proof their strategy is working.
Momentum, transformation, future readiness.
Hmm.
That's compelling. So these impressive overall numbers, where's the growth actually coming from? Which bits of Skipper are driving this? Well, it's definitely coming from a couple of key areas. The engineering business, that's their core, right? It hit its highest ever revenue quarter. RS $10,248 million.
Okay.
That's stupendous growth, they called it, of 24% year-on-year.
24%. Wow.
And what's really insightful there is the global reach. Export revenue for engineering grew 30% year-on-year. It's now almost a third, 32% of their total engineering revenue.
So broadening their base significantly.
Exactly. And then you've got the polymer segment. That's a really strong rebound. Revenue up 34% year-on-year, and volume was up 40%.
Okay, that polymer rebound is interesting. What's behind that? What made it bounce back so strongly?
Yeah, it wasn't just luck. It seems quite strategic. They shifted their product mix. The plumbing segment, which has better margins, went from 42% to 50% of the mix.
Okay.
Plus, they really pushed on distribution. A 39% jump in distributors they build, 23% growth in monthly billed retail outlets, wider reach. Stable raw material prices help, sure, but they're also doing things like engaging directly with 20,000 plumbers every month, building those direct links.
Right. Building relationships.
Exactly. I mean, the infra projects segment contributed too, but engineering and polymer are clearly the powerhouses right now.
Okay, so beyond current performance, the order book is often that crystal ball, right, for future strength. And Skipper's looks, well, pretty compelling. Tell us about the scale of that and any key wins.
Absolutely. That closing order book over our $35,000 million, I mean, that gives incredible visibility. It's mostly domestic, about 90%.
Okay.
But that 10% export is strategically vital. And what's really insightful about the Q1 orders, nearly ours, 20,000 million came in, isn't just the amount, but the kind of projects.
Okay, so what makes these marquee wins? Why are they so important strategically?
Well, take the three big 765 kV transmission line projects from PGCIL in Rajasthan and Andhra Pradesh.
Okay, 765 kV, that's the really high voltage stuff, right?
Yeah.
The superhighways.
Exactly. Ultra high voltage. Winning those isn't just about money. It takes serious engineering chops, a proven record, huge trust. It really cements Skipper in the top tier for grid infrastructure in India, super critical for the national grid plans.
Right.
And then there's this major tower testing and design approval from the largest utility in the Middle East.
Ah, interesting. Not just supply, but design approval.
Precisely. It's global validation of their in-house design skills. That's a big competitive edge. And looking ahead, their bidding pipeline is massive over ours. 300,000 million across the globe, Middle East, LATAM, North America. Huge potential.
That global reach connects to their bigger strategy, doesn't it? Beyond just orders, they're thinking big on capacity, international footprint. What are the plans there? Expansion, digital transformation. How's that changing things?
Oh, the ambition is definitely substantial. They just got a new 75,000 metric tons per annum capacity fully operational. That's a big boost to manufacturing power.
75,000 tons. Okay.
And they're not stopping. Another 75,000 MTPA expansion is already underway. The stated goal, get this, 600,000 MTPA by FY28.
600,000.
Yep. Which they say would make them the world's largest transmission tower manufacturer.
Wow. That's ambitious.
It is. But it's about meeting that surging demand, domestic and export. And to really drive exports, the board just approved setting up subsidiaries or branches in the UAE, the USA, and Brazil.
Okay, strategic location.
Right. Deepening that market penetration for towers and poles, getting closer to the customers.
And what about the digital side? Bringing operations up to speed?
Yeah, that's a crucial piece. They're rolling out SAP S/4HANA Rise, big digital transformation project.
Okay.
User testing's done, system integration's happening, go live planned for Q3 26. The insight here is this isn't just IT for IT's sake. It's about streamlining everything, boosting efficiency, getting real-time data for smarter, faster decisions.
Makes sense.
Oh, and they've also set up a new corporate office in Kolkata. Kind of symbolizes that evolution, I suppose.
So let's connect these dots. All this growth, strategic expansion. What does it mean for the company's actual financial health? Their efficiency? Are they growing smart or just fast?
Definitely looks like smart, sustainable growth, driven by real efficiency improvements. We talked about the 41% jump in profit, the better EBITDA margins.
Oh, right, 10.1%.
But look deeper. Their finance cost as a percentage of sales improved, down to 4.2% from 4.7% just in a quarter. Better debt management.
Okay.
And if you zoom out, look at the historical trends, they've been consistently improving key financial ratios. That's powerful.
Give us some examples there. What ratios are we talking about?
Okay, debt to equity dropped from 0.77x back in FY22 to a much healthier 0.59x in FY25.
Significant improvement.
Yeah. Return on capital employed, ROCE, key efficiency measure, right, jumped from 9.23% to 21.71% over those same years. Their capital is working much harder.
Wow, that's a big leap.
It is. Same story with return on equity, ROE, up from 3.43% to 12.52%. And maybe one of the most telling insights. Net working capital days plummeted from 231 days in FY22 down to just 95 in FY25.
231 down to 95, that's huge. Shows much better cash management.
Exactly. Vastly improved working capital, cash flow, that underpins everything else.
Yeah.
Management's focus is clearly on profitable growth, better returns, not just getting bigger.
Okay, so it sounds like Skipper's perfectly positioned then for these huge industry tailwinds we keep hearing about. T&D, power transmission, and distribution being a multi-decadal growth opportunity. What does that actually mean for them?
It's massive. Globally, grid investment is expected to nearly double in the next 5 years alone, CY24 to 29.
Double.
And
Okay.
India specifically. It's in what people are calling a T&D supercycle. Government plans national energy policy, national grid plan. They need tons of new transmission lines, more capacity between regions.
Right.
And remember those 765 kV lines we talked about? The emphasis on those is huge, expected to grow at 13% CAGR until FY32. And that's Skipper's sweet spot. They're literally building the country's energy nervous system.
And it's not just T&D providing these tailwinds, is it? What other sectors are helping?
No, it's broader. Telecom India is the second largest market, right? 5G rollout, massive data growth. That means huge demand for telecom towers, EPC work,
Makes sense.
railways too. Big electrification push, over 85% done, aiming for 100% soon, plus digitalization. All needs infrastructure Skipper can provide.
Right.
And polymer, we touched on it, but the shift from metal pipes, government schemes like Belugi of Jivan mission, housing for all, it all drives demand for polymer pipes.
So it's like a convergence of major infrastructure pushes.
Yeah.
Now, I've heard a lot about the China Plus One strategy globally. How does that play into Skipper's future?
Yeah, that's a crucial layer on top. China plus one. Basically, companies diversifying supply chains, not relying solely on China.
Okay.
That creates a significant opportunity for India as a preferred sourcing hub. For exports, across all these sectors Skipper is in, it could mean more global demand flowing their way, especially with their expanding capacity and global offices.
Right. Positioning themselves to catch that wave.
Exactly, and the company is clearly banking on it. They're sticking to an ambitious plan, 25% revenue growth for this fiscal year, FY26, targeting order inflows over ours, 65,000 million.
Okay. Ambitious, but grounded in these trends. Now, beyond the financials and strategy, ESG is increasingly important. Sustainability, social responsibility. What's Skipper doing there?
Yeah, they seem to be integrating ESG seriously, not just, ticking boxes. They've got Green Co. and Green Pro certifications from CII.
Okay.
They've done practical things like waste heat recovery systems, better filters for fuel efficiency, and a really significant insight, I think, is their renewable energy investment.
Oh, yeah. What have they done?
Installed over 2.6 megawatts of rooftop solar across their plants, generated over 5 million units, kilowatt hours between FY22-25. That cut out about 3,000 metric tons of CO2 equivalent.
That's tangible.
Yeah, and even smaller things like changing the gas mix in welding to save CO2, it adds up.
Shows attention to detail. What about the S&G? Social impact, governance recognition.
On the social side, their CSR focuses on education scholarships for girls, school infrastructure, environmental stuff like maintaining local facilities, even animal welfare partnerships. It looks pretty holistic.
Right.
And they're getting recognized for it. Great place to work, 3 years running. Awarded Emerging Power EPC Player by Power Grid last year, so external validation too.
Good to see. Finally, just for awareness, there were a few governance bits from that July 31st board meeting. Quick recap.
Sure, standard stuff, but important. Board reappointed Mr. Yashpal Jain as a whole-time director for 3 more years.
Okay.
They set the date for the 44th AGM, that's September 23rd, 2025. And the record date for e-voting and dividends is September 16th.
Got it.
And a notice about forfeiting some partly paid-up shares if the call money wasn't paid by August 19th. Just housekeeping, really.
Okay. So let's try and wrap this all up, bringing these insights together.
Yeah.
Skipper Ltd seems to be riding this powerful growth wave. Strategic investments, sharper operations, really aligned with these massive global shifts in infrastructure and energy.
Yeah.
It feels like more than just good quarterly numbers. It's about, like they said, momentum and getting ready for what's next.
Absolutely. And if you connect it to the bigger picture, it really raises a fascinating question, doesn't it? How will companies like Skipper, focusing on high voltage transmission, but also pushing hard globally, how will they keep adapting? With renewables coming online so fast, digitalization everywhere, especially with that whole China plus one sourcing trend accelerating things. This isn't just a company building towers and pipes anymore. They're actively shaping the physical backbone of our interconnected future.
Indeed. And what does this mean for you listening in as you watch the global economy? How might these huge multi-decade infrastructure trends ripple out beyond just power and telecom? What other maybe hidden opportunities might pop up from this fundamental shift in how and where things get built? Definitely something to mull over.